What's up everybody? Welcome to the Stocks channel. Today we see the small caps taking off as the rest of the market starts to pause at my price targets. What is the market likely going to do after CPI data? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was down 0.04%, and intraday we did make another brand new all-time high just above my price target, but as you can see, we are taking a day to pause here right around that price target above 501. Now tomorrow is CPI data, and that could be a catalyst. Whether it's good or bad is to be determined, but we are going into CPI data with a very strong bull trend, and we are in the blow off top scenario that I've talked about in great detail. So in a blow off top scenario, this is where you're getting those people that continue to call a top and they continue to try to short the market because they've missed the rally and they have no idea how to join the rally because they're bear biased fundamentally and think the stock market is overpriced. So their bias prevents them from buying into a strong bull trend because they think it can't go any higher, yet it just continues to do so, squeezing out the shorts, and that's what causes these parabolic blow off tops. So during a blow off top, you will not hear me call a top. Every time we hit my price targets, I am just going to give you brand new price targets until the bull trend rolls over and dies, and then we can start talking about downside price targets. So if you want to look for a bearish channel calling tops and looking for downside price targets, there's plenty of perma bear channels you can go follow. In this channel, we follow price action and trend, and while the price action and trend are bullish, I'm not making any calls that we've topped, and I'm not making any calls that we can't go higher because that's all bull crap. We can obviously go higher in a bull trend. So right now in SPY, as I've told you many times, this is a very bullish market above 491, and from 491, I told you we would likely hit that price target above 501, and we have now done that. That's why there's an arrow there, and yes, we hit it 2 days after I expected, but that's why we follow price and not time. Now, if we do break this price target, we're going straight to 507 and then 514. And yes, it is possible we continue higher because look how powerful this bull trend is. We have the higher lows and higher highs. All of the moving averages are positively sloping and there's great separation. And we are now pushing higher near a very strong support, which is that rising 5 EMA. So at any point, if we do start to pull back from this price target, it is very likely that we're coming down towards this gap fill at 494, and that is also going to be our rising support trend line from the bull trend. So if you want to get risk off, we need to at least break down below 494 and then 491, because even if we go down to that level and find support at a higher low, we can still continue to push higher within this bull trend. So for the sake of cleaning up the chart, we've hit the price target, so I'll delete the old arrow. And from here, you can simply wait until we break that price target to look for 507, because buying up here near resistance is never a great idea. So if you're not already in long positions and you're not already in swing trades in the profit, I do understand how you could see buying up here is not worth the risk and reward. And I would totally agree with you, but during a pullback, that is not going to be the case. If we start to pull back towards these support zones, then the risk reward is going to look a lot better to continue with the trend to higher prices. So very early in the year, I did a video with my 2024 price targets, and you could see very early in the year, we are already hitting some of those, and I do have ones that do take us higher. So of course we can go higher, but it's definitely going to be a very interesting year, hitting a lot of these price targets early in the year, and knowing it's an election year, hopefully we get plenty of volatility sometime this year to make for better trading conditions. But right now we don't have the volatility, and we have a very low fear strong bull trending market. And we are already doing very well this year in both bank trade alerts and the stocks channel simply because we are just following this trend and buying at support levels. So that's why I tell you the trend is your friend, because right now, if you're buying near support and you're getting low risk long entries, you are absolutely crushing this market. So even if we start to pull back, continue to remember this is a bull trend and the trend is your friend, which means as we approach these support zones, assuming we even get the opportunity to buy near support, that is going to be a buying opportunity until we lose the bull trend. If we lose the bull trend, we're going to break down below 491, and then we'll likely come down here into the 470s to test that critical support right around 477. So again, in my opinion, this is a very easy and simple market as long as you don't have a bias and as long as you're not trying to force your will upon the market. As I've said many times, you can easily go find bearish echo chambers, and you could find those all last year as well, but the market continued to march higher to brand new all-time highs anyways. So at some point, you need to realize the chart is way more important than somebody's opinion, and you need to start zoning out and tuning out all of those bears that continue to call for a crash, continue to call for a top, and continue to try to tell you why there's all of these fundamental reasons the market shouldn't be going higher. But as you can see from the chart, the market couldn't care less what those people think. The market continues to go higher anyway. So let the chart and the price action do all the talking, and the trend is your friend, which means we can and likely will continue to go higher until we see something on this chart telling us otherwise. On the NASDAQ 100 triple Qs, we were down 0.39% today, and we slammed right into that price target at 437 right on time. And we are starting to see some profit taking and a little bit of cooling down and consolidation now that we've hit that target. So as I said, we'll clean up the chart. We've hit the price target, so there's no reason to keep the arrow on the chart. And now that we've hit the price target and we are going into CPI data, it is possible we do get a pullback. But as I said with SPY, even if we get a pullback, that is likely a buying opportunity as we continue higher in a bull trend. So in the NASDAQ 100, if we pull back, specifically on the triple Qs, the buying opportunity is going to be right here, right around 428. As long as we're above 428, this is the blow off top scenario, whether you like it or not. And in the blow off top scenario, it is very difficult to know when we've topped. So the only way we're going to know the top is if we break down below 428 and lose this bullish support trend line. So 428 is a very critical support. Now, if we don't pull back, then we're just going to the next price target, which is right up there, right around 442. And that is going to require the break of 437. So tomorrow will be a big day because we're either going to get a pullback and a buying opportunity, or we're just going to continue in this blow off top scenario to the higher price targets that I've given you. In the Dow Jones, we were up 0.36% today. And I told you in the Dow, we're likely going to 391 as long as we're above 385, and we're still above 385. So we're likely still going to 391. Now, if we break down below 385, we have support right around that rising 20 daily moving average and support at 381 and the critical support down here at 377, meaning even if we go to 377, that is a buying opportunity for higher prices. This is why it's important to understand that we're in a bull trend and where your risk levels are, because if we pull back, you need to know where you should be buying. So in the Dow Jones, I see no evidence that the bull trend is over with. The price action is still above all these moving averages, and we still have that very powerful bull trend, so look for 391 next. On the Russell 2000 IWM ETF, we were up 1.82% today, and we have absolutely nailed this trade because I told you above 188, it was still a buy the dip, and from 188, I drew that arrow that we would likely go all the way up to 207, and as you can see, today we hit the price target at 203, and right after we break above 203, we are going to hit that price target at 207, so this looks like another knock out of the park trade as long as you bought down here near the low risk entry, near the support at that rising 50 EMA. Now, if IWM pulls back, we're looking for a buying opportunity right around the breakout and the gap fill at 199. And then from 199, we'll likely hit the price targets at 207 and then 214. So I'm still very bullish on the small caps. You can see we're still getting decent buy volume here, especially as we came down near this support. And now that we're bouncing from that support and we broke out above 199, we officially have a higher low, higher high breakout. And we are now in a bull trend, as you can tell from all the moving averages. So we haven't hit that price target yet. And I think we're going to hit that price target very soon, likely this week. And that price target is just above at 207. On the ARKK ETF, we were up 2.28% today. And ARKK had the bull breakout above 48 back here on Thursday, which I told you invalidated that we had a double top because it looked like we could have had a double top and we were starting to break down, but the price action told us otherwise by breaking back above 48. And then I told you above 48 we would likely start running towards 50 to 51, and as of today the high of the day was 51.1, so we have now hit that price target. It does look like we will continue higher, but we do have another gap down here that we need to watch, and that gap is going to be right around 48.6. So even if we pull back, we're likely going to get a buying opportunity towards the gap fill at 52. But this is a lot of bullish momentum, so there's a very good chance that we're just going to go straight up and fill that gap now, even though we are a little overextended outside that upper Bollinger Band. So we may go a little bit sideways before we hit that price target, so give it by the end of the week and we'll likely be there. Now, if we go fill the gap down here, you're looking for a buying opportunity near this support right around 48. And as I've said before, that means even if we go to 48, that means we'll likely put in a higher low as we continue higher. So it is looking like ARKK wants to go higher, which is undoubtedly obvious looking at the price action with the higher low, higher high breakout, and we're above that support at 48. On the VIX, we were up 7.89% today as the VIX is gapping up for the week and starting to run higher. But I've told you many times in this market, the VIX spiking anywhere below 15 is just simply pullbacks or a little bit of spike in fear in a bull trend. And because we're in the blow off top scenario, there are a lot of people getting uneasy and they could be starting to hedge. So I don't see any concern with the VIX unless we get all the way out here above 18, because that's going to be the fear that could lead to high volume panic selling. On Bitcoin, we're currently trading at 50,000, which was the price target on the breakout above 43,500, and I told you this was as simple as staying bullish above 42,000. Above 42,000, we had that bull flag look, and we had the breakout above the resistance, and then we broke resistance again at 44,500. So as you can see, Bitcoin is getting plenty of high volume buying, and we have the bull trend, which means we're going towards that price target right there below 51,000, and if we break that, then we're going to 52,700. So Bitcoin is now as simple as staying bullish above 47,000 because that's the bull breakout, and that should be your new risk level. On Nvidia stock, we were up 0.16% today, and we did get the bull breakout on Friday above the price target at 703, and I told you above 703 we would go higher towards that price target below 747, and it looks like we got very close to that price target today. Now, I've said this many times that we would likely run into earnings, and earnings will finally be coming up around the corner looking like next week. But because we don't have earnings and we have a strong bull trend, we could just continue to run higher into earnings and then see some profit taking after earnings. So once more, do not bother shorting this stock. I've said that since we've broken the high at 504, and look how far we've come. This is just a bullish freight train with a very strong fundamental story. So if you're a bear, there's plenty of other stocks worth shorting, and this is definitely not one of them. I think right now it's as simple as staying bullish above 703, and if we break below 703, we're likely going to start retracing back towards 670. On Tesla stock, we were down 2.81% today, and I told you Tesla was as simple as staying bullish above 183, and above 183, we could go close that gap just below 207, but it will require the break above that resistance at 197. So it looks like on Tesla, we are getting a bit of a pullback today, but we didn't break down below 183, which means even if we come all the way down to 183, we could still go higher and hit that price target. So use 183 as your risk level if you're bullish, and if you're bearish, you're simply shorting below 197 for the price target down here in the low 170s. If we break down below 183, I have that price target between 167 and 173, and I do believe there's a very good chance that could be the bottom in this stock. But obviously in a downtrend, we don't want to bother calling bottoms. We want to manage risk. And if you're long-term bullish on this stock and you want a low risk entry, those are the support levels I'd be paying attention to. On Apple stock, we were down 0.9% today, and Apple is as simple as staying bullish above 186. And we are getting a pullback into this support zone, which is going to give us a low risk bullish entry. From 186, I think there's a very good chance we're going to start bouncing higher towards 195. So look for that support zone as a buying opportunity, and if we break below it, then you're looking for the rising 200 daily moving average of support right around 183. So 183 to 186 is a low risk bullish entry for Apple stock, and if we break below them, simply just get risk off because it means we could be going down towards 177 to 174. So jumping back over to the S&P 500, we are in that blow off top scenario. So as I've continued to warn you, do not bother trying to call a top in this market. There's going to be plenty of people doing it, and it could be tempting to try to catch a top. But I'm telling you right now from experience, those people lose their ass trying to call a top, trying to short the market because they think they're smart and they can outsmart the market. And they just continue to short bullish freight trains, and they look like absolute fools in the rearview mirror once you realize how high the market went and how long ago they started shorting. Do not be a fool, because the chart is telling us everything we need to know, and there is absolutely nothing on this chart that tells us we need to start shorting a bull market. Let the fools be fools and let them move their money into our accounts. And if you've been bearish and losing money, rest assured your money is now with us because we have been crushing the market, staying bullish in a bull market. As I've said many times, trading is difficult. If it was easy, everybody would be profitable, and we just know that's not the case. And I will continue to sit here each and every day and tell you to follow the price action and the trend because that is truly the best way to be a profitable trader. And of course, you need to manage your risk around these critical risk levels. So if you want to come crush the market with us, you can consider joining Bank Trade Alerts, where you will get all of your buy and sell alerts directly via email and text message. And it is very simple to follow because we only trade the ETFs TQQQ and SQQQ. You can find out how to join Bank Trade Alerts by clicking on the link in the description of this video. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join the Stocks Channel Discord in the link below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.